Hi there, welcome to Kneppy Invest, and welcome to July 24, 2024. We have about 1 hour and 20 minutes left of trading today, and overall, a mixed bag on the ASX. A few indices down, a few indices up. And on a day like this, I might find it hard to hide my enthusiasm, my excitement about exactly what I do. In particular, when I come to my desk in the morning at about 8 to 8:15 a.m. and I start going through announcements. And this time of year, we are starting to see more and more quality reports being released. And we have a few discussed in today's video, but also a couple of interesting, intriguing announcements released by other companies, including one company that released a positive trading update. In fact, it was an EBIT upgrade. And this is a case where the market got it completely wrong. Share price of this particular company was in a downtrend, and I think the market was expecting a downgrade, but it got exactly the opposite. And I'll talk about this company when we look at the top 5 stocks of the day later in the video. So what is the agenda for today's video? Well, fairly similar than other videos. We'll go through the best and worst performing companies, indices and sectors on the ASX. No tweets today. And then we'll have a look at the top 5 stocks of the day. A few other companies I might want to mention, and then I'll go quickly through the other Appendix 4Cs and 5Bs that were released today. A few that didn't make it into the top 5. Might have a look at a few charts, and then I really want to discuss a few of your comments. Get across a few of those. So let's get stuck into it and focus on the ASX today. So a mixed bag. And that's just by looking at the top screen here on Market Index. A few indices down, a few indices up, which is understandable because the American markets were down slightly, but no bloodbath or anything like that. I did notice that Tesla in aftermarket trading was down about 7% last time I looked, because they did release their quarterly results after market has closed. So possible down day on the American markets just because of Tesla. But maybe the rest of the companies on the NASDAQ looking bullish. I don't know. Anyway, so let's have a look at the sectors indices that have done well or badly today. Funny enough, real estate is down a lot, 1.4%. Probably Goodman Group is down a fair bit. REITs might be down today. Energy down by over 1% as well. So Woodside, Santos, Staples down 0.61%. So Woolworths, maybe Wesfarmers is down today. And quite a few indices flat or down or up slightly, including IT only up 0.21% and healthcare down 0.18%. So it's intriguing that if you look at the sectors, mostly flat, but a few sectors down a fair bit, which is intriguing. Well, I find it intriguing. Gold's had a really good day, which is understandable. I do want to talk about one company that released their quarterly results today, and maybe I shouldn't because gold has had an absolutely brilliant day, up 2.62%, and this company's share price is up a fair bit. So maybe I should skip that company and put another company in its place. That company is West African Resources. I'm a little bit biased. I do own some shares in that company. And elsewise, if that is a word. Otherwise, I think I wanted to say otherwise, not elsewise. Otherwise, yeah, most of the other indices are down. So really, gold's had the best day based off this. Now, let's just have a look at the ASX 20. So based off the sectors, I would imagine Goodman Group, Woodside, Santos, Woolworths, Wesfarmers are down, and then companies like WiseTech are probably up. Maybe Telstra's up as well. So let's have a look at the ASX 20. I'm assuming 8 companies up, 12 down. Let's see if I got this right. Oh, close, very close. So 9 up, 11 down. Let's have a look at the worst performing. Goodman Group, Woolworths, ANZ, not sure what's happening there. WiseTech, in fact, is down, even though Tech's had a pretty good day. Transurban, and there's Woodside and Santos. On the other end of the spectrum, REA Group's had a good day, which sometimes you will see REA Group, because we consider that to be more of a tech company than anything else. But sometimes I have seen that company's share price run or drop because of real estate. Anyway, QBE, Fortescue, there's Telstra. So NAB and Westpac are among the best performers in the ASX 20, which is sort of counter to what we saw with ANZ. So some sort of, who knows, maybe there's rotation. Maybe fund managers are rotating between the banks. They're getting out of ANZ and CBA today and going in NAB and Westpac. I don't know why. They're all really overvalued, in my opinion. And Wesfarmers is flat. Well, interesting day for, well, not really. To be fair with you, when you look at the performance of the indices, not that interesting, apart from gold. Gold is interesting. Okay, so let's get to best and worst performing companies on the ASX. And this is a little bit exciting because I haven't looked at this today. So this is exciting. I might have missed a few companies. So let's see if I have missed a few companies. Sometimes I will have a look at these lists before I record this video. Sometimes I don't. This is one of those instances where I haven't. And the first company popping up in percentage change is Hexma. No idea about that company. Apparently it's in healthcare. Up 66.67%. Turnover, okay. Market cap is 3.34 million. Let's have a look to see if this company did release something today that has caused a little bit of excitement in the market. And the answer to that is it has. Oh, they've released a few things. They are acquiring something called Real Thing Entertainment. Doesn't sound like that's healthcare. Doing consolidation. And let's open this up. Well, I'm not going to open up 103 pages. Let's open up this proposed acquisition of Real Thing, whatever that is. So obviously this is probably more like a shell of a company. So it's not really healthcare. Hexima, whatever they were doing, didn't really work. So they're moving or pivoting into something else. So Real Thing is commercializing its autonomous, intelligent software agent platform. That's a mouthful. ASAP, based on the belief, desire, intention model of human practical reasoning. So I'm not sure how this relates to entertainment, but I could be just ignorant. But it's got the magical words there, artificial intelligence. Okay. So obviously, if this takeover does go through, this reverse backdoor does go through, this company will change its name to something else. Maybe change its name to, what was the company called again? The Real Thing. Maybe they'll change their ticker code to RTE or RTH because maybe RTE is taken. Okay, so I did completely miss this, but maybe, and just, we haven't had many IPOs on the ASX recently, and I would consider this to be a quasi-IPO. It's a backdoor listing, it seems like, and this is a new company on the ASX. But I still won't have a look at that company, Real Thing, whatever it's called, for a while because I have no idea how it's going to perform. It may be nothing, but at least it's in possibly the right space. Okay, as we go down the lists, coming in number 5, we have Wagners Holding Company, up 23.29%. Not a surprise, although I thought the share price would fluctuate. And this is my top stock of the day. This is the company I was talking about. Share price was in a downtrend. So I think the market was expecting some negative updates from the company. It didn't happen. In fact, they released a positive upgrade and the share price has rallied. So this was a potential buy if the share price hadn't fallen. But share price back up to 90% or 90 cents, not 90%. Alcidion up 21.82% on the back of an announcement. And this company is also in my top 5 stocks of the day, coming in at number 3. Pluri released their pennies 4C. I thought nothing of it. Share price up 16.7%, but it's on fairly low turnover. So don't really need to discuss that because I wasn't that enamored by their quality results. And other than that, nothing else on this list except SciDev is down the bottom. There he is, SciDev down the bottom, up 11.11%. This company did release their pennies 4C. I'm a sharer of this company. And funnily enough, SciDev has come in at number 2 on the top 5 stocks. So we already know number 1, number 2, number 3. In fact, we also know number 4 because that's West African Resources. So the only company we don't know is number 5. What could it be? Maybe it's in the, if we have a look at top gainers by market cap, maybe it's in the list here. Red 5, gold. Emerald, gold. Spartan Resources, gold. Temple Webster, not gold. WA1 Resources, that's gold or something like that. Vulcan Energy, sort of like lithium. Arabanda, gold. Beacon Lighting, discretionary retail. I suppose Temple Webster would be discretionary retail as well. Coria released their pennies 4C, was it yesterday? Umutep, Southern Cross Gold, yep, gold. Callus Metals, gold. Share price of that company's been on a tear. 29 Metals released their quarterly numbers today, up 6.6%. Copper, and otherwise, yeah, nothing there. FBR up another 20%. Anyway, so let's have a look at the worst performing companies today. It's not a surprise we see a lot of gold companies on the top gainers. So let's have a look at the top losers today. See if there's anything interesting in here. I might want to talk about SRJ Technologies. I did put on that company on the possible talk about lists. They actually are doing an acquisition and a capital raising, and it's in an interesting space, and the share price has dropped 22%. I'm not sure if I will talk about that company. And otherwise, as we go down this list, nothing of note here by percentage change. Although Frontier Energy, I think that's doing a capital raising or an acquisition. I forget. I did see the company in the announcement lists, but what are they doing? Oh, debt finance. Yeah, debt finance. And they also released their pennies 4C, but it's not really relevant because they have no receipts. Okay, so let's have a look by market cap, see if there's any big companies at the top here. Imagine, Ioneer, Antares Technologies, there's Frontier, Titomic, Halix, down now below $1. Fell through that level fairly easily. So not a lot of strength to that company right now. And as we go down the list, nothing of note. To be honest with you, nothing of note in the top losers of the day. Okay, so let's have a look at the top 5 stocks of the day. But before we do that, I might just I'll discuss these few companies I just want to discuss in a little bit more detail after we look at the top 5 stocks of the day. So let's start with number 5, which I haven't discussed yet. And the reason I want to discuss this company is because I am interested in this company when we see a turnaround in lithium. Well, lithium prices anyway. And that company is Pilbara. Pilbara Minerals did release their quarterly results today, and I don't think they're all that bad. Okay, so they released their quarterly activities report, a presentation, and then they did something wrong with the original quarterly activities report, so they had to replace it. That happened a few times today. So let's have a look at the replacement quarterly activity report. So they are increasing production, but there are a few things that interest me about this particular quarterly activity report. Now, this company has a lot of cash on hand, $1.6 billion of cash on hand. But 1 year ago, they had $3.3 billion. So cash on hand has halved. The most important thing for me is whether or not this company is operating cash flow and free cash flow positive at current lithium prices. And they are. That's the most important thing. And we know they are when you look at the realized price, $840 a ton, compared to the unit operating cost, which is in US dollars 483. So this company is generating a bit of cash. However, cash did drop from 1.8 billion to 1.6 billion, and they did blame that. Blame is probably the relevant word there. They did blame that on capital expenditure somewhere down here. Capital expenditure, I'm pretty sure they're going to mention it somewhere. And just trust me, they do mention it somewhere that the reason the cash did fall is because of capital expenditure. And of course, I won't be able to find it because there's a fair bit going on here. Oh, yeah, no, it is. Strong balance sheet position in June quarter, and cash balance of 1.6 billion. Cash reduced by 156 million in the June quarter, largely due to continued capital expenditure for P680 and P1000 expansion projects. Both projects remain on schedule and on budget. The other thing that interests me about Pilbara Minerals is their projections for financial year 24. So they do expect further increases in production. And if I remember correctly, costs about the same or maybe slightly lower, about the same. So here, now that's financial year 24 guidance. So we have the guidance and the actual numbers. In fact, actual numbers were a little bit better than expectations. And financial year 25 guidance right here, page 7, page 8, page 7. And they are expecting, here it is, production to increase a little bit, unit operating costs to remain about the same, if I remember correctly. So about 654 for this year, and about, or between 650 and 700, and capital expenditure to remain fairly high as well. But the big thing about Pilbara Minerals is if the lithium prices start to increase, this company will start producing prodigious amounts of cash in their operations. So that's the main thing, and main reason why I am following this company a little bit more closely, because I think this was a pretty good quarter, all things considered. And again, if lithium prices rise, and don't forget, they have a lot of cash on hand. So that's Pilbara Minerals coming in at number, actually I should look at the chart first. So what's the one thing holding me back from Pilbara Minerals? Well, you got it right. It's the chart. Chart looks pretty nasty. Probably as nasty as my haircut. Yes, I did just, that's all I did. I missed a bit at the back. But anyway, chart looks pretty nasty. It's just fallen through support maybe a month ago. Share price has been a little bit volatile today. So the market's not sure whether to like this particular quarter or not. But yeah, there's no reason to rush out and buy Pilbara Minerals right now, unless you're really confident lithium prices will start rising tomorrow. Maybe you are that confident. And if you do look at the weekly chart as well, share price, thank you, TradingView. Share price is in a weekly downtrend. Last time share price was this low was way back in, 2 years ago, in July 2022. Okay, so that's coming in number 5. We have Pilbara Minerals coming in number 4. And maybe this company doesn't belong to number 4. I just saw the share price was up 5%. I went, oh, pretty good quarter from the company. And that's West African Resources. And to be honest with you, this was a good quarter for the company. Now, they are spending a fair bit of money on building up their next project into production. I think that should be in production maybe next year. So they are spending a fair bit of money and getting more into debt. Company also recently did a capital raising, and I wasn't the biggest fan of that particular capital raising, but the company is generating cash in their operation. So $75 million operating cash flow for this particular quarter. For the first half of the year, 116 million, but they are spending money. In fact, capital expenditure, 131.6 million on or spending on that new project. Starts with K, Kyoka or something like that. So the company does have, still has a little bit of cash. 143, no, that's the wrong one. Have $425 million of cash. They have done a couple raising, and they are in debt. That's okay, $411 million of debt. So, and I think this is going to be fairly similar to when they started their current projects, when they went to production maybe 3 years ago. They were in debt, and because the costs of running this particular or these particular gold projects in Burkina Faso are quite low, as soon as they get in production, they're going to be producing lots of cash flow so they can wind down that debt really quickly. And when I say quickly, I mean really quickly. These sort of companies that do have projects or operations in Western Africa tend to trade on lower, I'm going to say lower premiums, but probably the best way to say it, they do tend to trade at a discount than other gold companies because of a perceived higher risk. That risk is a political risk. But Burkina Faso did go through a coup d'etat, however you pronounce that word, a few years ago. Nothing happened to the mine. Nothing happened to the company. So it is a risk you have to be aware of, but you do get the benefits of that risk with higher rewards, higher potential returns moving forward if nothing really happens bad to the company. Anyway, and I'm just going to open up the activities report just to have a look-see, because I actually didn't have a look at this. So here we go. Oh, it's Kiaka, K-I-K-A. Kiaka construction is progressing on schedule and budget with $125 million capital expenditure in the second quarter. I forget exactly when they expect that to go into production. Okay, here we go. Construction of Kiaka remains on track for first gold to be poured in the third quarter 2025, when this company will become a plus 400,000 ounce per year gold producer. One of the reasons why I'm still holding shares in this company is because of that particular line. 400,000 ounces per year. In the current quarter, they produced half year. Well, in the half year, they produced 107,000. So they're almost going to double their production. And that's why I'm still remaining a holder of this company. And the chart, and this is another reason why I'm still a holder of this company. The chart looks pretty good. No complaints about the chart. Well, that's a weekly chart. No complaints about this chart. A little bit of volatility because they did capital raising on the 4th of July. And the share price did fall because it was a little bit of a discount, but no complaints about this chart. Share price has been in a beautiful uptrend since March. I'm not sure if I prefer this over Perseus. I always compare West African and Perseus because they both have operations in West Africa. And I probably prefer Perseus. And the main reason probably is because Perseus didn't do that capital raising. But that's just the chart. Otherwise, I am West African, a shareholder, not a Perseus. So maybe I'm a little bit biased in that regard. Okay, so that's number 5, West African Resources, up 4.91%. Whether they belong in the top 5 stocks today because gold's had a really good day is another story. Now, onto a company that has really disappointed over the past, say, 5 years, and that's Alcidion. Share price up 23.6% on the back of being selected as preferred EPR supplier by North Cumbria. I'm a little bit surprised the market has reacted this well to this particular announcement because this company has promised a lot over the past 5 years, has not really delivered. In fact, it's been a disappointing 5 years for shareholders of this company. And the total contract value likely to be in the range of 30 to 40 million Australian dollars over a 10-year period. So that's a long time to get 30 to 40 million. So the present value of that 30 to 40 million is much lower than 30 to 40 million. So just by looking at the highlights in this particular announcement, which is all I really read, I wasn't that enamored with it, but the market thinks differently. And the market says, something to like here with Alcidion. So let's have a look at the chart. Is it time to become a little bit more excited about this company? Alcidion. But first, let's have a look at the weekly chart. So share price of this company was as high as $48. Not $48. Well, it was as high as $48. I think shareholders would be jumping off buildings by, well, that's probably not the right way to say it because it's only 6.7 cents. Now, share price went to a high of 48 cents back in the middle of 2021, 3 years ago. And when I said 5 years of disappointments, 3 years of disappointments, because if you go back 5 years ago, some shareholders probably are pretty happy because in May or April 2019, that's when the share price broke out. And actually, I was trading. I did a position in this company for a period in 2019. It was just a trade. Also owned some shares in this company back in 2021. But I never thought this company to be a long-term hold. And I think a lot of people have been caught out by Alcidion because this company did look promising. I will give those shareholders that pass because this company did promise a lot and they haven't quite delivered just yet. And that's why when you look at the daily chart, share price has been a downtrend for a long, long time. Now, this EMA cross, I've just changed a little bit. I went to a 25 to 100 cross instead of 50 to 200. So you get a lot more signals. And in fact, I'm going to show you how to change that. It's very easy to change that. How do you source code? There it is. It's very easy to change it. So 50 here. Oops, you got to put the right number in. 50, and you put 200 here. Whoops. And then you save it, and just see the crosses change. There it is. So if you look at the 50 to 200 cross, this company was a sell, and I do prefer this crossover. I was just testing the other one just to see how many extra signals you'd get. You can see how much has changed for Alcidion. This last sell signal was December 2021 at a share price of around about 25 cents. So it's now 6.7 cents. In fact, I probably would have sold well before that sell signal because the share price was in a downtrend before that. But sometimes you have to give a little bit of a leeway for the share price of a company, and maybe you could have done that with Alcidion. But ever since then, share price has been a downtrend. And no signs of it coming to an end until possibly, I'm just saying possibly now. This has been the most promising this Alcidion chart has looked for 3 years. Share price went on a little bit of a run, not that long ago, April. share price went from 4.5 cents to 7 cents, then fell back to 4.5 cents, and then started running again. Now, the one thing I didn't like was not a lot of volume, but today's share price has got to, particularly if it closes above 7 cents, the share price is around about a 6 to 8, 9 month high. So there is potential that things might be turning around for Alcidion. I'd love to see their Appendix 4C. I'm assuming they will release it, unless they're being told by ASX they don't have to, but don't know why they wouldn't. Last quarter, they released it on the 18th of April. So now the 24th of July. So there is a chance that this Appendix 4C from Alcidion is not that good. Just a possibility because, well, in fact, you probably should look at last year. When did they release their Appendix 4C in July last year? They released it, what year am I? They released it on the 27th of July. So expect a company's Appendix 4C within the next week because it has to be released within the next 7 days. Anyway, so I'm not quite there saying this is a breakout because there has been a little bit of selling today and the share price is really near that old high we saw on the 3rd of May at around 7 cents. But I think this was enough. The direction from the market is just enough for me to say, hey, this company does belong in the top 5 stocks of the day. Definitely, this company does belong in the top 5 stocks of the day, and that is SciDev. Now, I am a shareholder of this company. I am biased. I've been a shareholder of this company for a long, long time. This is one of those companies where I just didn't want to sell out when I sold out most of my other positions in February of 2020. I just held onto these shares for a while because I do like the potential. I like the space they're in. So this is like water treatment, that sort of thing. And they released their Appendix 4C today. As soon as I saw it at 10:03 a.m., I went, I almost went away from my computer. They released it at the perfect time because if they released it at 10:05, I would have completely missed this. Completely missed it. Anyway, so Appendix 4C. This company released a really good Appendix 4C in the March quarter. And I was just thinking, will it be as good as that? I wasn't quite sure. I do like the title, Record Revenue Quarter Drives Strong Returns. I never look at the commentary before I look at the numbers. So let's have a look at the cash flow statement of this company for the June quarter. So receipts and customers, 32.6 million. And the company was operating cash flow positive by $2.2 million. For the year, receipts over $109 million and operating cash flow positive by $6.5 million, which means this was a really good quarter when you compare it to the other 3 quarters of the financial year in terms of receipts and also cash flow. Not a lot of capital expenditure, only $461,000 in this particular quarter. They did spend a little bit of money on acquisition, but even though they did spend money on acquisition, they were still free cash flow positive. And when I say free cash flow positive, in this case, cash on hand actually did increase, even though they made an acquisition. So cash on hand went from 9.1 million to 9.4 million. The other thing to note for any company is Section 7, financing facilities. Does a company have any debt? And sometimes you want to have a look at Section 8, which is only pertinent for those companies that are burning through cash. This is how many quarters of cash you have based off your cash burn in the last quarter. And if they have less than 2 quarters of cash on hand, they have to actually answer Section 8.6. What are they going to do? What is the company going to do to maintain a viable business moving forward if you're burning through a lot of cash? But of course, SciDev doesn't have to answer that because their cash on hand actually increased. The other thing I want to look at is the cash receipts history of this company. So I do have it in my, here it is. This is the cash receipts history for SciDev. So I first became interested in this company in late 2019 when we started to see the cash receipts increase. In fact, in the September quarter 2019 was the first time receipts got above $1 million. Yes, $1 million. So receipts have grown from $1 million or just above $1 million to $32.6 million in 1 quarter. Beautiful growth in receipts. A little bit of lumpiness there, but if you just ignore the lumpiness and just put a trend line, a beautiful trend in receipts up to 32.6 million, a record quarter. So the last 2 quarters, record quarters for this company. That doesn't mean the next quarter is going to be another record quarter. We could see a dip in receipts like we have seen in the past. But in my opinion, that's not a reason to get nervous about this company, because it looks like they are now cash flow positive, free cash flow positive, more than likely also profitable as well. And the market has paying attention. Share price up 13.6%. Share price at 46 cents is the highest share price has been for a while. And this is a developing beautiful developing uptrend for SciDev. And the only thing I should have done is added to my position, but a beautiful chart developing uptrend for SciDev. Share price on the back of the last quarter, that's when it really shot up. So if we go back to their last quarter, let's just go back. This was released on the 18th of April, and on that particular day, 18th of April, share price of SciDev rallied 25.9%. You could have bought on that day at 30 cents or 34 cents. You could have bought the next day at 32 cents. In fact, you could have bought a month later at 30 cents on the 28th of May. So sometimes when you do see the share price of a company rip higher like SciDev last April, you have a lot of time to possibly buy in to the better than expected quarter, because this would have been better than expected. You don't see the share price rally 25% when it's not better than expected. And let's just go back to this particular quarter. So receipts were 31.3 million, and the company was operating cash flow positive by 3.8 million. So 2 really good quarters in a row for SciDev, but probably would like to see a third and a fourth. I'd like to see one whole year of really good quarters from a company, and I'd love to see receipts keep on climbing. So I am bullish about this company long term, and I've been bullish for 5 years now. And in fact, this is the chart, 5-year chart. And notice the share price really took off in the middle of 2019 when the receipts started to really go wild. That's when the breakout happened. There was a mini breakout back in 2016. There could have been when they acquired. They did make, this was another company back then, and they did acquire SciDev back then. Anyway, that's when the share price really took off, is when the receipts started to climb. And then we saw the receipt, or the share price really pull back in 2021, 2022 on the back of increasing interest rates. So people thought this company is not profitable. They are going to have a lot of trouble getting capital for the future. So we want to sell. Share price fell from $1 all the way down to 16 cents. I held all the way through that. But things are now turning around really well for SciDev, just based off this nice daily chart. So that's coming in at number 2, we have SciDev. Coming in at number 1, we have Wagners. Share price up 20% on the back of a financial year 24 trading update and guidance. As soon as I saw this, I went, oh, it's going to be negative. The reason I thought it was going to be negative was simply because of the chart. Share price was in a downtrend. And sometimes the market gets it wrong. Rarely gets it wrong, but sometimes it will. And this is one of those instances where the market got it completely wrong. The market thought this company was going to release a downgrade. So let's open up this trading update and guidance. I did do a video on this company a while back, and I actually did mention that if the share price got to a certain level, I would buy, and I completely forgot about that. Wagners, is Wagners good value? Released that on the 11th of April, and I'm pretty sure the share price was probably higher than it is right now. And I thought it was pretty good value then. So I do think it's good value here. The only thing holding me back is the chart. And I just think there could be a little bit of resistance moving forward. So this was a really good trading update from the company. I have one slight negative, but it's only a really picky negative. Anyway, improved group operating EBIT result of 40 million compared to previous issue guidance of 31 to 34 million. So there was a pretty significant upgrade. We're talking about a 20% upgrade, maybe even more than that. And then it's just their reasons why. Strong trading conditions observed with construction materials and services business, particularly in May and June. Maybe that's a surprise to the market that there is strong trading conditions in those areas. Positive performance in composite fiber technologies, Australia, partially offset by losses in overseas CFT. I'm pretty sure that composite fiber technologies is their environmentally friendly cement. I could be wrong about that. Or maybe, yeah, I'm pretty sure that would be it, because the this is like a cement business, by the way, but they do or have developed an environmentally friendly cement. The one slight, uh, the one slightly negative thing I do have is they do or will be having two impairments. 4.5 million impairment because one of their projects has come to an end and they're relocating their precast manufacturing facility. So that's an impairment. And there's another impairment, an EFC asset impairment of 5.7 million. So that's a $10 million impairment. And that is not included in the EBIT result. So in fact, the EBIT, if you compare the actual numbers, is it the statutory numbers? Yeah, statutory numbers compared to the underlying, it actually will be lower. So that's my one little gripe. It's not a big gripe, and I am being a little bit unfair on Wagners because it's just a one-off impairment. But a really good quarter from Wagners, and I think this has surprised the market. And you'll be able to see that when we look at the chart. So this is a chart for Wagners. Share price before was in a downtrend. Share price fell from almost $1 in April down to 70 cents in July. So in a 3-month period, share price dropped, 30% on the back of nothing. And then the company releases this profit upgrade. And the share price right now is 89 cents. And it's in a very strong resistance area. Why do I say strong? Because the share price, if you just draw a rectangle like this, and we can draw it like that. Share price traded in this range between about 78 cents and $1.10 for the last 10 months. So a lot of people bought in this area, and the share price now is back. Actually, in fact, I'm going to just increase it a little bit. We'll go to where the share price is right now, and we'll just bring it down a little bit. Bring it down to where the share price has been as high today. So in this area where the share price has been trading today, there's a lot of investors, a lot of shareholders bought in this area. So that is resistance. And one of the reasons why the share price hasn't really gone on a run today, a significant run on today, is because of these shareholders who now have seen the opportunity to get out of this dog stock. So the thing you have to understand about a lot of investors, when they buy shares in a company, they always expect shares in the company to rise. If the share price falls, they think they didn't make a wrong decision. It's the company's fault. The company's a dog stock. As soon as the share price gets back up to where I bought, I'm going to sell. That is the mindset of a lot of investors. That's the definition of resistance. And that is what Wagners is facing right now, that resistance. If the share price of Wagners was now at a 1-year high, I would be bullish. I'm not so bullish back because of this resistance. But doesn't mean I won't buy some shares, because if the share price can get through this resistance area, that will be very bullish. It needs a little bit more volume. Another thing that's just holding me back right now is the volume. I would want a little bit more volume coming in for Wagners. So the volume has been, in a way, uninspiring, but still a really good update from Wagners, and it definitely belongs in the top 5 stocks of the day at number 1. Okay, other companies I want to talk about really quickly. When I talk about this company called SRJ Technologies, share price down 22%. They do or are making an acquisition and a capital raising. Capital raising is at a price of 5.5 cents, which is a fairly big discount. Now, what was interesting about this particular acquisition is the company will be now EBITDA positive. EBITDA positive. I don't know a lot about this company. Not even sure I've done any videos on SRJ. Let me just have a look. SRJ, nothing. SRJ, nothing. So I don't think I've even done a video on this company. And I did go through this particular announcement fairly quickly, and I went, oh, this actually does sound interesting. And the one thing that just caught my attention was this company they're acquiring provides remote inspection services to the oil and gas industry with advanced robotics and custom drone technology. That sounds really interesting. But the other really interesting thing was they did provide sort of a trading update. Okay, here we are. So the combined group revenue is $12.3 million and EBITDA positive, $3.2 million EBITDA. and gross margins of 78%. This is the combined group. So I think this company is probably stronger through this acquisition. And in a way, I think this company they're acquiring, ACE, might be the better of the two. I might be crazy in saying that because I don't know much about either, but just briefly going on some of these numbers, I like it. And yeah, this is. Oh, by the way, SRJ, the reason I say that, if actually they do provide it here, SRJ on a standalone basis will have revenue of 4.6 million and EBITDA negative. But we'll have a slightly higher gross margin. So this company they are acquiring, ACE, which stands for Air Controlled Entech, I think is the higher quality business. So this is another case where potentially a better company will be on the ASX. So that's SRJ. Share price down a fair bit. I was thinking of putting a sneaky bid at 7 cents, but not a lot of trading has happened today. In fact, when they announced this acquisition, share price opened at 9.6 cents, and then someone just had to sell at 7 cents. In fact, the share price went from 9.5 to 7 cents on this one trade. Someone just had to get out. I'm not sure why you would do that, because that's a big decrease in share price. Anyway, that's SRJ. Another company I want to briefly touch upon is a company I missed yesterday, and that's BKI Investments. These sort of companies are interesting because you can get ideas. If you have a look, I'm not sure if it's their presentation or their media results. This is a fund manager or something like that. And the reason I like one of the things you can do with these sort of companies is just have a look at the top 25 investments. I did this with another company recently, and I liked that particular fundy or whatever, or listed investor or LIC, because they were investing in companies I might like to invest. So this is the top 25 investments of BKI, CBA, BHP, NAB, Macquarie Group, Wesfarmers, APA Group, New Hope, Woodside, Transurban, Woolworths, Telstra, ARB, RB Norman. Why not just buy an ETF? ASX 200 or 100 ETF. This is just like an ETF. And then I had a look at the chart, and yeah, there's absolutely, in my opinion, just my opinion, not even, no reason to even think about buying this company. So if you look at the weekly chart and look at the past 10 years, the share price of this company has not moved. It's gone up slightly, but has really not moved. Well, the other thing I should mention is SRJ. I didn't look at the chart for SAJ, and this is the weekly chart for SAJ. It's just been, this is the weekly chart. It's been on a downtrend for a while, but the share price has been going sideways, and the share price has just dipped today because of the capital raising. But yeah, and not a lot of volume. You can see a real dry up in volume in 2024 compared to 2022, 2023. So I'd probably like to see a little bit more volume coming in for SRJ. Anyway, now a few other companies released their Appendix 4C or 5B today, including actually, what I'll do is I'll look at the charts. AQN, Aquarian. This company is operating cash flow and free cash flow positive. The markup of this company is fairly low at $17 million, and the chart doesn't look inspiring. Now, the one inspiring thing about AQN is simply the numbers. Now, no reaction from the market. In fact, there's been no trades today. So even though this looks okay, this Appendix 4C, no reaction from the market. So receipts, 7.1 million. Operating cash flow positive, 1.5 million for the quarter. For the year, 6.4 million. Now, the one thing I went, ooh, is a capital expenditure. For the year, 12.5 million, but for the quarter, only 637,000. So this is sort of a mining services company. I don't know a lot about what they do. I might have done one video on this company in the past. AQN, 100 interesting stocks. Can't even remember doing that. There you go. Sometimes I don't remember what I've done in the past. Yeah, Aquarian. Is that how you spell it? Aquarian. Aquarium. Anyway, that is Aquarian. Another company that released a positive Appendix 4C is Acusensus, a company I did trade recently and then got straight out. And share price is in a downtrend. Share price up today by 7% because they were operating cash flow and free cash flow positive. I just don't like the business. That business is AccuSensus, ticker code ACE. Oh, you just see here, share price is only up 0.88%. So obviously there's been a little bit of selling recently. Yep, there's been a fair bit of selling recently. I'm not sure why. AccuSensus said it's up 7%. I do know TradingView is behind by 20 minutes, but if you go back 20 minutes ago, so we're talking about 315. Oh yeah, no, 61 cents. The last trade at 315 was 61 cents. Yeah. Anyway, so that's the problem with TradingView. It is behind by 20 minutes, and sometimes you do miss moves. Anyway, so not much interest in AccuSensus, even though they were or are operating cash flow and free cash flow positive. Pantoro, maybe not new, but this is a gold producing company. The reason I say new is because the company is operating cash flow and free cash flow positive, potentially for the first time, but the market doesn't care. And when I say for the first time, I'm pretty sure I have had a look at this company in the past and they weren't operating cash flow positive. The chart did look interesting. I'm just going to have a look at the chart because CommSec has taken ages to open this particular announcement. Look at it. It's just ridiculous sometimes. The chart was looking interesting, but the share price has pulled back the last month from a high of 10.5 cents down to 8.3 cents. So a possible buy the dip situation. Can't believe it's still opening. It's just ridiculous. What I'm going to do is I'm going to open this up, Pantoro. This is how bad CommSec is sometimes. I still like the platform. I'm going to open up the announcement in Market Index. Still not open in CommSec. And we go to, there it is, open straight away. So EBITDA of 25.8 million for the quarter. If we go down to the numbers, so you have to go through all the crap. So for the quarter, receipts of 78 million, operating cash flow positive 25.5 million. But if you look at the year to date, receipts of 229 million, only operating cash flow positive by 9.2 million. So in terms of operational cash flow, this company absolutely hit it at the park for this one quarter. Now, there could be reasons behind that, and I haven't really delved deeply into it. But based off the numbers here, a pretty good quarter for Pantoro. The market really hasn't reacted, has it? Share price is only up slightly. So that's Pantoro. Another company, Aroa Biosurgery. Share price flat. Company is not operating cash flow positive or free cash flow positive for that matter. And I actually did do an updated chart for this company. So let's have a look. There it is. And receipts have been flat the last 3 quarters at around about 17.7 to 18 million. The trend is still there, but I need to see receipts continuing to climb because they are not operating cash flow or free cash flow positive. And I'll be also honest, I didn't like the wording because they did mention strong cash receipts from customers. Well, it's all relative. $17.8 million of receipts may not be strong for some companies, and I just don't like that wording. Maintaining revenue guidance of 80 to 87 million New Zealand dollars and normalized EBITDA profit, normalized EBITDA profit of $2 to $6 million. So let's just have a look at a chart for Aroa Biosurgery. Definitely a company I do have my watch list, but not quite there with this company. It does look like the chart wants to turn, sentiment wants to turn more positive for this company. This could have been the announcement that could have triggered a new trend and a shift in sentiment if it was more positive than it is, but share price is flat. And the last company is AML3D, share price up 9.4%. I just think this is a little bit of noise. They did release their appendix for, say, I did a video on this company a fair while ago, AML3D, and not all inspiring. So receipts 1.6 million and operating cash flow negative 1.3 million. I did a video on this company, when was it? AL3MD. What's it called again? AML3D. AML3D. Well, I've done 2 videos. Well, first one was in October 2023, and the second one was in February 7th, 2024. my introduction video was October 31st. Just have a look at the chart for this company. Maybe I should have taken a position in this company when I first did that video, October 2023, because the share price at that point was 7 cents. Now it's 17.5 cents, but I would have held for a long time. In fact, the share price dropped a fair bit in the middle of 2024. But for some reason, the share price has really taken off. The market has, I can see the volume has just expanded, but it's not on the back of any positive financial information from the company. I think this is just a lot of, I think this was the recommendation from that Next thingy, email service, and they pay for that recommendation. Yeah, I think that's why the share price went on a bit of a run. Anyway, when I first had a look at this company a year ago, I actually did like it. And I think it does have promise. But I think the share price is getting a little bit ahead of itself right now. Okay. No charts for now. I'm just going to have a look at a few comments. I just want to, a few comments. I was going to reply to this one from Darren94954. Looks like you got in way too early with CPV. So some people believe, or obviously believe, once you buy a company, you can't sell. And share price now at 44 cents. And CPV's chart looks like this. And I was just trading this company, and I'm been out for a while. In fact, I've been out probably for over a week, or about a week. Yeah, so this chart doesn't fill me with anything right now. So so I'm out of CPV or Clearview. So just because I bought a company doesn't mean I can't sell it. I can be in and out of company fairly quickly. So that's that, and I'll just give that a thumbs down. No, I'll give it a thumbs up. Just don't be mean. I'm not saying don't be mean to me. I'm saying to myself, don't be mean to Darren. Okay. Any Aussie showing their portfolio of value investors so we learners can follow? Any Aussie showing their portfolio of value investing so we can, okay. Donna's Garden, Raw Vegan, also says, Cloud Strike run all the elections around the world. Elon Musk stopped using them and moved to links. Doesn't mean others have woken up. Do you mean CrowdStrike? Okay. Okay. 6 Meter says, Kneppy, I've been watching your videos for quite a while and enjoy them. They're especially good on 1.5 speed, as some can be a bit long. Well, sorry. Otherwise, it's great to see some of your reasoning about things without any fancy videos that other people put out. Can you please show me or point me to the video of how you screened for your 6-month highs, 3 months highs? I remember seeing it, but can't find the video again. Keep up the good work. I can do that for you now, 6 Meter. So this is Trading View. If you look at down the bottom here, you should have Stock Screener, Client Editor, Strategy Tester, Trading Panel. If you open up Stock Screener, you'll probably have a few automatic screeners in here. And I've got it set on 3-month high. And my filters, one filter is I have it on a new 3-month high. That's it. And you can find the 3-month high, 6-month high, 1-month high down the list. Here we are. So if you go down the list of all the screeners or the filters, you have a new all-time low, 52-week low, 6-month high, 3-month low, 1-month low, all-time high, 52-week high, current trading day, new 6-month low, new 1-month high. So yeah, that's all it is. It's nothing fancy. That's all it is. Very simple. That's how you find it. Hopefully that helps you, 6 Meter. Anderson says he will actually tap dance day Palladium turned positive. I would like to see a video of you tap dancing, Anderson. Yes, I would like to see you tap dancing. Method 341 says FBR looking like a buy. I know I'm going to be fairly obvious, or not obvious. I'm going to be fairly honest with you right now. So for about 3 weeks, maybe less than that, about 3 weeks, I was trying this new trading of these story stocks, that sort of thing, on a 1-hourly basis. I've given that up. You just have to pay too much attention to these companies because there's a lot of volatility. However, FBR is up 20% today. And what I mean by volatility, share price up a lot, down a lot. So share price fell of this company from 5.6 cents or 5.8 cents. In fact, let's have a look at the chart. And I did try it, and that's the whole point. You have to try stuff. I did try this, and I just found it I like the sort of companies where you don't have to follow them intraday, where you could just buy a position and you come back a few days later and go, oh, it's up a little bit, up, down a bit. So I'm really looking for the longer term trends. Some of these companies could be long-term trends, but a lot of volatility in there. So this is FBR, and you can see a lot of volatility. But if it keeps going up higher, and the other thing I don't like about these companies, I do think they are playthings for day traders. And I'll be honest, I want to stay away from day traders because you get the volatility, because they love volatility. And yeah, share price of this company fell 6 days in a row from a high of 6.2 cents down to 4%. Funny enough, it hit the short-term moving average channel. This is the daily chart, by the way, and it's bounced off that really nicely. If you like, look at the 1 hourly chart, so I was looking at 1 hourly charts, and it bounced off the longer-term moving average channel. There we go. I would probably prefer to see higher volume coming in today. Not a lot of volume driving the share price bounce today. So that's FBR, but it is a story stock. You do have to be aware of story stocks. So I am staying clear of FBR and all these other companies, including CPV, just because I want a little bit more substance to the company before I even think about trading them. And I'm also looking for value when it comes to trades, because research has shown that trading low or cheap companies is actually, or can lead to greater returns. And it sort of makes sense. Roger Dawn, even another great video. Do you think SGR and City Chic might be getting close to their bottoms? So Start Entertainment Group. This will be my last, might to Woodside. This will be my second last comment. Not City Chic. I am not interested in City Chic at all. So I'll start the negative one. Not interested in this company at all, because the bottom could be, there's no signs that the bottom is even close at this point in time. There's no certainty right there. I need a little bit of certainty when it comes to this company. So I don't know. They released a really negative report or update the other day, the 24th of June, and the share price has gone a little bit lower since then. But who knows? They could release another negative trading update in a few months' time. Just don't know. So I'm staying well clear of City Chic. But in saying that, potential turnaround. I'm always interested in these potential turnarounds, particularly if they look cheap. So the market cap of this company, again, cheap. Market cap of this company is 47 million. It wasn't long ago, the market cap of this company was $1 billion. Share price of City Chic was $560 not long ago. When I say not long ago, less than 3 years ago. And I'm pretty sure the market cap of this company would have been nearly $1 billion, and now it's 47 million. So I think if they can turn around, there's a big if there, if things start going positive for this company, this could be a turnaround play. I don't think it's there just yet. However, Star Entertainment Group, I am paying a little bit more closer attention to this one. And I just think the turnaround could be near. Just don't know when it's going to be. I do think the bottom has been reached. I think most of the bad news has been priced in. Share price has been going sideways for a while. Share price was still falling, gradually falling, or very slowly falling during the latter part of 2023 and the start of 2024. But I think during most of 2024, share price has gone sideways. So we are seeing a consolidation period for Star Entertainment Group that possibly has lasted for about 7-8 months. The longer it lasts, the better. So we can flush out all the shareholders who bought in the past at higher prices. They become bored because share price is going sideways. There's no run up in the share price, that sort of thing. No traders, no day traders are in this at all. So if you saw a lot of volatility in the share price up and down a fair bit, there'd be a lot of day traders. No day traders. So when the company releases something positive, if they release something positive, I think that could be the sign to get in when it comes to Star Entertainment Group. So I am following this company much more closer, well, way closer than City Chic, just because of the charts. And I think Star Entertainment Group is much further along the turnaround path. Now, just because they're on the turnaround path doesn't mean they're going to go all the way. They could get sidetracked, that sort of thing. And finally, I'm just going to have a look at Woodside. Interesting one, and no growth. I did actually mention there was one here when it comes to Woodside. Oh, here it is, yeah. So Not sure I agree that Woodside's 4 invalidates technical buy factors. The 4 is on fundamentals only just recently revealed to market, namely doubts about their announced acquisition. These fundamentals have now driven technical forces. I did actually reply to this. I don't think Woodside was a technical buy before the quarter report. Just wondering why a few experts, chartists, were heavily bullish on the company. I just didn't understand it. And so there was that. And then what happened to those other comments? So I'm going to have to. Those comments just disappeared. Those other woods that, here it is, sorry. I thought it just disappeared. So Swimming says Woodside is an interesting one, and then Stuart Percival says no growth, too capital intensive. I think she mean TOO, not TWO. So definitely, would I be interested in Woodside? Let's have a look at the chart. And there's one simple reason why I would not be interested in Woodside. It's a mining company. Share price has bounced off this support level, which is about $27. If it fell through that, that would be really bullish. So one of the reasons why that chart is, I'm pretty sure he did mention the long-term support level for this company is $27. And I had a look at the long term, and it's not that, it was talking about this high way back in 2021, and then it fell away, and then burst through that level in 2022. But I just think this company looks really bearish. I don't like the quality of this company. It's a low-quality company. The share price high for this company was 2008. So if you look at the long-term chart, why would you buy this company for the long term? Share price over the past 16 years has gone down. I don't care about the projects. I don't care about the acquisitions. I just look at this and say, this is a trading stock. That's all Woodside is. It's a trading stock. In fact, I would say Woodside could be the lowest quality company in the ASX 20. Santos, Telstra would be close competitors with Woodside of the companies I can think of right now. In fact, I do have an ASX 20 watch list. Here it is. So, in fact, I've ranked this by quality, and I have Telstra down the bottom. Woodside is 19, Santos is 18, QBE, Westpac, NAB, ANZ. Transurban, I might lower that actually. But definitely Woodside is near the bottom of the quality spectrum. This is a low-quality company, has not provided any sort of good returns for the shareholders over the past 16 years. And if I look at the daily chart, I just think, no. A nice little bounce off the support level today, but that's all you've said. A little bounce. That's what I'm going to talk about when it comes to Woodside. Not my favorite stock. I just was amused. Maybe amused is not the right word. I was mystified why, it was Gary Glover, said this was his biggest holding in his technical analysis portfolio. And I was like, why? I just didn't understand it. Anyway, that's all I have for this video today. If you enjoyed it, maybe you should like the video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.